Okay, good evening and welcome back to our Tuesday night market outlook session. Today, we're here to talk a little bit about what we're currently seeing in the markets. We certainly have a lot more stability here this week than we had last week, but there are still a lot of risks to the downside, in my opinion, that we're currently seeing in the market. So today we want to review where we currently stand, what type of research we're currently looking at to inform our decisions going forward, and then share with you some of the ideas that we're currently looking at for the Nordic markets. So before I get started, just a quick disclaimer. What we're going to discuss here is not a solicitation or recommendation to buy or sell any specific securities. So let's start off by taking a look at where is the market right now. So here's a chart of the OMX S30, the Stockholm index. As those of you that joined us last week or the previous week, we talked about how the markets dropped roughly 50% during the coronavirus sell-off. It rebounded almost a third of the way and has now basically been sitting in this channel here between 1500 roughly and 1350. So about 150 points channel, and the market have found a bit of an equilibrium, a bit of a stable footing right now. And the question from a lot of investors is really, where do we head forward? Now, if we look at a lot of the research that I'll be showing you here today, there are some concerns for me that things are going to be drawn out a little longer than perhaps many investors might think. The consensus across the board earlier this week was still looking for a Q3, Q4 recovery. As each day goes on, that outlook, I think, is slowly getting pushed out a little further into Q4 and perhaps even beginning of next year. And I think those are some of the risks that I currently see in the market. But as of right now, with the data that we have, the markets are very, very sideways. I do see the fact that on the daily chart, we have been rejected at the 20-day moving average, which suggests to me that we're going to revisit that 1350 low. If things don't get progressively worse, I see more of a range-bound motion somewhere between 1350 and 1500 here on the OMX S30. If we zoom in here on a daily chart, what's interesting for me was the fact that as this market continued to push higher from this roughly 1280 low all the way up to that 1480 high, during that whole time, momentum has predominantly been sideways. It hasn't really moved any higher. And what that tells me is that really these types of rallies are likely going to stall and potentially pull back a little bit down, at least down to around the 1350 level. As you can see, as markets kept making higher and highs, the momentum did not continue to move high, and higher lows actually resulted in lower momentum. So this shows me that markets are currently stalling. The only, I would say, positive currently we're seeing in the markets is really on oil recovering a little bit in terms of pricing. The announcement today that hopefully Saudi Arabia and Russia are going to reach an agreement over their fight in terms of pumping oil. However, as markets continue to slow down, as demand continues to slow down, I don't see a swift recovery in oil prices. So those are some of the downside pressures we currently see in the markets, and that's where we currently stand. So let's take a look at some of the research that helps us inform our decisions. So Sweden remains a little different from the rest of the countries around the world. Sweden is one of the few countries that are currently remaining open. Most countries and cities across the world now are pretty much locked down. Now, this is a direct, I would say, direct opposite of what China is currently going through. China locked down in the beginning of February. They are starting to get back to normal, meaning they are allowing their citizens to continue to resume their life. Industrial production has started to get back to normal. This is 60 days after the initial lockdown period. So we've been trying to use this type of template to apply to other countries. And so far, Italian data seems to show something similar. Italy locked down their citizens starting around March 8th, March 9th. And the number of deaths in Italy peaked on March 27th, which is roughly 18 days after they instituted a lockdown. However, I will say that what's concerning for me is the fact that China and Italy actually had pretty sophisticated lockdown for their countries, versus most other countries have only instituted a much more casual lockdown, even the ones that are locked down. So if you look at Spain, France, Germany, major industrial centers in Europe, they still had the highest number of deaths yesterday. So yesterday was still the highest number. So this is a concerning, at least for me, and US is still at least 1 to 2 weeks behind Europe. And the research still currently shows that the countries that are not taking this as seriously, that have not locked down, are likely going to see a much, much longer and protracted economic downturn for those specific countries. Now, Sweden's trend so far, despite trying to buck the trend and going a different route, currently shows no difference in terms of trend. So I will say that the Swedish data currently has a very small sample size, so it's hard to extrapolate that data very strongly. However, I guess the positive here is the fact that Sweden is able to have the same number of cases without having the same degree of economic slowdown. So that, I think, is a net positive for Sweden, meaning Sweden's not seeing higher number of cases as a result of remaining open, which obviously, again, is a net positive here. So that's what we have here on the coronavirus news. And the takeaway here, from my perspective, is that a lot of countries and cities around the world are not taking it as seriously as China and Italy have. And I think we'll likely, we're going to see continuous downward revisions for economic impact for those specific countries as a result of this. So again, this is just some of the data that we currently see. This is Italian data. On March 9th is roughly when they instituted their lockdown. They peaked here on March 27th, which is roughly 18 days between them. Sweden is still clearly on the upside. On April 1st, they had their highest number of deaths yesterday, around 58 number. So this is clearly still on that exponential growth trend like Italy has been seeing. And the thing about this is that when you're in this type of trend, there's no indication as to when things are going to slow down. So, however, the data that we do have is if a country does institute very strong lockdown procedures, roughly how long this is going to last. In a country that doesn't lock down, we don't have that data yet. So unfortunately, it's really hard to predict what's going to happen here in the Nordics right now, but we do have some data to now look at to give us an understanding as to the length of this type of impact. Now, what's really interesting, now this is research out of Bank of America institutional research, and this morning was the first time that they drastically slashed economic outlook in the past week. They were changing things very quickly during the first couple of weeks in late February and early March, and then things stabilized a bit over the last couple of weeks. And today they issued some massive cuts to what they expect in terms of GDP forecasts will be for 2020. And globally, they're looking, originally we were looking at about 0.3% growth for 2020. That's been slashed to negative 2.7. That's a huge amount. US went from 0.8% down to negative 6. Eurozone went from 1.7 to negative 7.6. The only improvement really was in China, or I'm sorry, the only less negative number was out of China. Again, countries that were able to institute very large draconian measures to contain their coronavirus, those are the ones that are least impacted because they are actually going to be impacted from a length perspective the least. And that's really, I think, the more important metric to look at here is not necessarily how deep we cut things, but how long this thing is going to last. And the data that we're currently showing is that in many countries, like in the US, it just has not taken this very seriously. Many Eurozone areas also not taking this as seriously in terms of forcing their citizens to stay indoors. And those are the countries that we think are going to see the most negative impact. The second piece of data that I want to show you is credit card spend. This is data that is published daily out of Bank of America's clients' usage of credit cards. And what we see here, and I don't think it's a surprise for everyone. Whoops. I don't think it's a surprise for everyone that categories like airlines, travel, entertainment, and restaurants see the highest decline in credit card spend or decline in spending. I will say what some of the highlights for me was interesting was that online electronics and groceries actually had a pretty strong, or still continuously actually higher than normal. And things like home improvement, general retail, actually also relatively strong, down about only 9% or 15%. Total credit card spend down 31%, which roughly is in line with some of the economic slowdown that we saw out of China. We saw China in February slow down roughly about 35%. So right now, the data that we're currently seeing is roughly in line with roughly 30–40% decline in overall economic activity. The downside risk that I see is that this can potentially get worse. This is really where we are now. And, you know, we went from hopefully opening up our country in April to now the end of April, and now we're talking potentially the end of June. Each week that we go on for is a significant impact to the economy, because there are long-lasting effects that every single additional week that we are locked down, that's going to have ramifications not only on US, but also global markets. So those are some of the downside risks that I currently see in the markets. And unfortunately, this type of news, it's not the type of news that's going to come out immediately and impact the markets. It's going to be more of a slow burn. So as bearish as I might be, or as negative as I might be on the markets, I don't expect to see the same type of panic selling that we saw during the initial sell-off on OMX S30. I think that if you do get negative news, it's going to be more like a slow grind to the downside as things get worse. The only, I would say, upside to all of this, the only thing that I think could potentially reverse this view and cause the markets to move back above this 1500 level and continues to recover are two things. One, we either come up with some medical drugs or medical cures to potentially slow down this virus or cure the virus, or perhaps warmer weather, as you know, as some people have tried to indicate that warmer weather seems to have a negative impact on the virus, that if warmer weather actually slows down the spread of this virus. Those are the two, I would say, things that could potentially reverse things quicker than we had expected. So those are the two things to keep an eye out for. If we do see either one of those things, I do expect markets to recover, potentially break back above 1500 and start to move higher. So with that, what I want to do is I want to move to some market observations. I want to show you some of the ideas that we're currently looking at here in the markets, giving you an idea as far as what symbols we're trying to pay attention to. I'll start off with some of the better looking stocks. So Swedish Match, very strong stock that is holding up well in this particular market environment. I guess people are still need to smoke cigarettes. People still need to buy tobacco products. You know, as you can see, it's held up very well throughout the sell-off, going from about 680 down to about 490, significantly smaller drop-off than the overall market. Has actually managed to break back up above 550, which is a major support level here. So the fact that it's managed to get back above 550 suggests to me that it's going to make a run back up to that 630 level. So there are a few different ways that you can play this. You can buy the stock, you can buy a call option. Call options are actually relatively inexpensive here. You can buy a May 570 call for 3,600 crowns on a 580 crown stock. Which is a fairly, I would say, inexpensive trade here to make. And chances are, if you get filled at the midpoint, which is closer to almost 3,000 crowns, you have a pretty cheap call option here to take a bullish view here on Swedish Match. That's one, I would say, positive outlook here. Axfood, also similar type setup. Axfood, as you can see, sold off pretty heavily, but managed to recover also very quickly as well. The line in the sand here is really that 200 level. which acted as a pretty major level for quite some time, as you can see here multiple times. Broke below 200, acted as resistance, and finally broke above it. So a lot of resistance at 200, managed to break above it. That is a very strong indicator for this particular stock. Now, the call options here are a little bit more expensive, but the spreads are pretty wide. But if you can get filled at roughly 1,200 crowns for a May 205 call option, that certainly is worth looking at, or perhaps going out to June, looking at 1,500 out to June. This is something that might be interesting because you have a break-even price here at 220, which is a new 52-week high. So by June, if this stock makes it back up to 220, now if you think that if you think about all the spending that is being shifted away from restaurants towards grocery stores, this is the type of play that I think is interesting and might propel the stock to a new 52-week high. Using call options is a great way to protect yourself against, if you do get another violent sell-off, if you were to buy this stock as opposed to buying the call option, if the stock plummets back down to 170, here you're losing 3,800 crowns for every 100 shares. Here you're losing less than half of that, 1,500 crowns. So this is really the way that I would play a bullish move here in a stock like Axfood. Another one interesting stock to look at is Atco. Atco, I believe, is it A or B that has options? Whoops, Atco A is the one with options. Atco, what's interesting about this particular stock here is that it's trading just above that 300 support level here. Now, this isn't as strong of a support as the 200 is on Axe Foods, but the fact that it's managed to get back above that 300 level, I think, is a good risk to reward for a move higher into the 350, potentially 380 level. And the good thing about this type of setup is that it's hard to say that the stock won't go below 300, but if it did go below 300, you can get out pretty quickly, meaning I would get out of this trade very quickly if you saw that this stock started to move below 300 here. So if you did buy this call option here in this May 310 call for 2,100, if the stock declined to, let's say 285, back to this 280 level over the next few weeks, you can get out of this trade relatively quickly, and you're not risking 2,100 crowns. You're risking maybe a little bit more than half of that, 1,300 crowns, if this stock does fail at that 300 level. But if it does make a move back up to that 360, 380 level, you're looking at almost 4,000 crown profit. So you're risking 1,400 crowns to try to hopefully make 3,000-4,000 crowns. So that's the type of risk to reward that I really like, on a setup like this. It's not as strong of a setup as some of the other ones. The stock is not as strong as Axe Food or Swedish Match, but it is an interesting setup that might provide a pretty good risk to reward if markets do bounce and start to move a little higher. So those are some of the bullish names that I'm taking a look at, and I'll pull out a couple of the more bearish ones if things do continue to move lower. Most of these are in the industrial sector. This is really a sector that especially if global slowdowns continue for an extended amount of time, I think this is going to have a fairly negative impact. This is a stock that has taken a pretty big tumble and retraced back almost half of its gains. And I think what you're going to see is potentially an extended move to the downside. And again, similar to the Atco setup here, you got a pretty major resistance around 150. And my indication is that this thing is probably going to at least retest that 52-week low around 112 or so. So what you can do is you can take a look at buying some put options here, looking at going out to May, possibly June. Buying that 137.5 put will cost you roughly 1,300 crowns. And again, if this stock gets back up to 160 or so in the next couple of weeks, you're looking at roughly about 1,000 crown loss or so. If let's say by by mid-April, things recover, things are not looking as bad. Markets are up again, and you're looking at about 1,000 crown loss. And then on the downside, if the market does move down to, let's say, that 110 level, you're looking at about a $1,400 profit. I'm sorry, 1,400 crown profit. So about 1.5 to 1 risk to reward ratio on this particular trade. Not as attractive as the ADCO trade here, but I think a higher probability trade, because this is a much more weaker stock in a much weaker sector that has a far worse outlook, in my opinion, than the other couple of setups. And I'll just do one last one here for to give you guys some ideas to take a look at. Whoops. ABB is the symbol that I wanted to take a look at. Also an industrial stock here. Very, very similar setup. You know, you have a stock that's retraced almost 50%, rallied almost 50% of that initial move, has moved down substantially. So you, again, a higher probability trade because you have this pretty strong resistance around 190. And you're likely going to get a move more back to the downside. Put options here are pretty cheap here. You can go out to June and pay for a 175 put for roughly 1,600 crowns, which if you do get a revisit back up to that 144, 145, move to the downside, you're looking at about 1,400 crowns in profits here on your 1,500, 1,600 crown investment. If you do get this to continue moving lower, that's really where you can kind of hit things out of the park. Well over $2,400 crown profit here. So those are some of the names that we're keeping an eye out for in the current Swedish markets, looking at the markets here today. So that's a quick overview of what we're currently seeing here in the markets. I hope that this was useful in helping you guys better understand how we're viewing the markets, what opportunities we currently see, what indicators we're watching to give us a sense for where the markets are going. Things are, I would say, somewhat stable here right now. But again, we're consistently seeing more and more downward revisions on how long this is going to last from an economic perspective. Like I said last week, major consensus was still around end of Q3, Q4. Most of the economies around the world get back on our feet, looking at roughly 1-2% negative growth in 2020. Those estimates have now been revised this week to looking at closer to 5 to 7% declines in 2020, which is a major, major shift in expectations for global outlook. And most of that is not necessarily because we think things are getting much worse. It's because we think things are going to last much longer. And that length factor is really, really important. So very important to keep an eye out on data that looks like this, that gives us a sense for how long this is going to last, because as soon as you peak, you can get a sense for how long the tail end is going to last for you to get back to normal when you can start reopening up your borders. Now, your economy. But every few days this grows, that tail gets substantially longer. And that's really the risk. Even for an extra week, your tail gets substantially longer, sometimes by a whole month. And that's really the power of exponential growth, is that, you know, an extra week ends up being substantially longer here on the timeline. And that's really why the estimates so far have been being pushed out so much, because of this law of exponential growth. And that's why I think it's so important for countries and everyone to do their part in helping us stay safe, stay at home, so that we can reduce the amount of time it takes to reach our peak, and hopefully reduce the amount of time it takes for us to reopen our economy. So again, I hope you guys find this useful. We will send out the recording to everyone so that you can watch this at your own pace. And I hope everyone stays safe and happy trading. And I'll see you guys next week.